Hi traders, and welcome to the Technical Analysis Market Wrap on Friday the 3rd of June. So we find ourselves on a non-farm payroll Friday again. It seems to have come around very quickly this time. And look, we've had a reasonable move for a Thursday really. Some of the markets have moved pretty strongly. So we'll jump straight into the charts and see if we can identify any opportunities for today or early into next week. All right, we'll start out here with the Aussie USD. And look, we've seen a really big move up to the 200 moving average, which is look, it's the spot we would expect it's going to find some sort of resistance. There's no question about that. You can see we've got all of the resistance right through there. It touched it again there. So no real surprise that it actually got here. But what it does now is going to be interesting. We've got a lot of MACD push up. Like, it wouldn't surprise me to see it go stronger, but probably not without some sort of a curl up. You can see that the swings that we've had all the way up have been very consistent. And generally when we see that consistency right through, it normally continues. So, this move is not one that's unexpected, but it's probably one that would be surprising if it continued on. So, that being said, we're probably going to start looking for some sort of weakness around here. If you're not already in it, if you didn't sort of long it from this area here, which is where the reload zone was, you can see that that was the support zone that we were talking about earlier in the week, and it obviously picked up from there and went exactly where it needed to go. But if you're not already in that, it'd be a difficult time to be jumping in, because of course now it's finding itself at a 200 moving average, finding itself at a roll reversal. You need to be going to the smaller time frames and looking at it. Like I say, when you go to the smaller time frames, the opportunities for all there to get in on this whole trend basically has been pullback to the 20 moving average. Happens. I say the same thing every week. It's because it's repeatable. It does it all the time, and it's the easiest way to trade. It really is. But now, of course, we're at this resistance point now at around that sort of 72.70 area. I would be probably looking for weakness. You can see we've had a pretty big pullback now to this level here. So ideally, in a perfect world, we'll see it come back and maybe retest this zone here. If it's going to have another crack at the top end, probably this is a level it needs to come back and test. Around that sort of 72.20 area, we'd be pretty comfortable with that. It'd have to break the 20 moving average a little bit, but it may find support there. I'm not that keen on the long only until, well, the thing is, there's two ways to get involved in a long now. If you're not already involved, you're entering basically into a brick wall. So you either do one of two things. You either look for a reversal and pull back to a decent level, which is around this level here, and then reload it to try and go again. Or if it does continue on and break through, wait for it to come back and test it from the top. So then it becomes a roll reversal zone. The roll reversal switches, resistance becomes support. Then that's your launching pad to take it long. Really important that you don't want to be just jumping in, into a brick wall, because it puts your odds. I mean, of course it can do it, but it really puts you at a significant disadvantage. And of course, this is not what we're trying to do. We're trying to take the easy path, and the easy path is to either wait for a pullback or wait for it to break through and come back and retest it. Now, if it goes on through and doesn't come back, well, so be it. Sometimes that's just what happens. But the odds are that it will do a pullback to it, and then that becomes a very strong zone. So two ways of trading it: pull back up to the long, wait for it to break, or on the flip side, you go to the smaller time frames, you see a change of trend, and you see a lightning bolt on the way down, and then trade it back down to that 71 area. The 71 is probably the area where it's most likely to get to. 71 down here. 71.20 probably is the absolute zone. If it does reverse from there, I'll put a line there for next week so we know what we're talking about. The 71.20 is the area that we're talking about. Okay, this level of support. So if it does reverse from here, this is where we will be targeting. Okay, so a few ways to trade the Aussie. US dollar CAD has continued to fall. Look, it's hit all our markers. I mean, it's been a good trade from the standpoint that it's given us all the entries that we wanted. There's no question about that, and all of the exits as well. But it just keeps continuing to fall. Now, look, it's getting to a level now where the next real level for this one is basically the 24.80. That is still a good 80 pips away, but in reality, that's the target. It's hit all our targets on the way down, so it's been a little bit of a real, well, it's been great. Actually, I suppose it's the only way you can put it, because it's done everything we've wanted it to do. Is it finished here? I would have probably thought that we'd find some sort of resistance where we were there. I certainly wasn't upset taking profit at that level. But looking at it now, I would be thinking, I wouldn't be just jumping on board. I'd be waiting for it to probably pull back to this level from below. Look for a pullback up to the 26.20. And if it does reverse from there, then we'd look down and look for the 24.80. 124.80 level. That's the area that I'm looking at. I wouldn't be just jumping in now. Like I said, we've already captured a big drop of this anyway, so we're not going to be too greedy. But in saying that, if we get a pullback up to the 126.20 area and it starts to keel over on the 1 hour time frame, this is the area I would be going for. I'd be wanting to get involved at that point. We know we've got a 20 and 50 cross about to happen. It'll happen any time now. So yeah, that being said, we know that this zone is pretty strong. Let's just see if it comes up and tests it again. If you're not already in it, like I said, it's a bit of a guess and check. It's not too far away from the middle of the channel, and it may find some sort of support here at around that 125.50. So you'd want to be a little bit careful entering around this level, but a pullback up to this level and a keel over on the 1 hour would be a great result. Failing that, the upside trade on this one, of course, is if it pulls up back above the 126.20 and we get a close above it on a daily, then we start looking at taking it up higher again, up to the 127.50 and 128 in the middle of the channel in the first instance. But two ways to trade that: pull back up to here, we short it down to the 124.80, which is a good potential trade. But if it closes a daily close above the 126.20 again, and we would look for the price action to remain in this channel again and start targeting the middle of the channel in the first instance, and then the upper band of the channel around that 128.20 area. So good trading on the CAD. All right, US dollar yen is, look, it's been playing the game pretty well as well. It came off the, once it broke up past this level again, you can see we've had two very, very strong days in a row. Back up around that, just a tick under 130. It's do or die time for it now. Look, we've had a big pullback. It's been a very, very big move, as you know. It's come back down. Now it's having a go at the tops again. It needs to break the top for mine. Yeah, the trade's already gone. If you're going to trade it long, that's already kind of done. This is not the area you'd want to be going in, because realistically there's resistance right in front of you. So it's going to be a hard road pretty much as soon as you enter that trade. But if it gets back up there, very similar to the Aussie in a sense, where if it gets up there and breaks that zone, then I would be looking at a pullback to the 131 from above, and that roll reversal will kick us into gear for that trade. That's what I would need it to be doing. Of course, if it fails to get to this high again and keels over here, which is always a possibility, you can see on the 1 hour, it's already starting to struggle a little bit. If we get that downturn and we get a series of lower highs and lower lows, so the negative lightning bolts on the 4 hour, because it's such an important time frame, I'd be waiting for a 4 hour, because if we do get a lightning bolt to the downside, it's probably going to mean a significant move down. So it'll be worth the wait, and the patience will be basically justified if you get that lightning bolt on the way down on the 4 hour. Because if it does that, what that means is that we've had a failure to reach that previous high of around that 131 area, and that is a significant downturn. So you can see here, like the MACD has dropped down to nearly below zero. So the 12 and it tells us that the 12 and the 26 have all but crossed. It's nearly at the zero. So although we can see still a separation between the 20 and the 50, the smaller ones have obviously just about crossed. So if it fails to make a new high, it's going to show a significant sign of weakness and an extraordinary MACD divergence. So very, very interesting to see where this one plays out. We'll see what this one goes over the non-farm payroll period and early into next week. But again, a break up here, we long it from a roll reversal zone. That's the way we want to do that. Wait for it to change from being resistance to support. But failing that, if it fails to make a new high, we start to look for shorting opportunities back down to around that 126.50 in the first instance. And if it breaks that, then it becomes a free for all, and we start looking for that 123 area again, that 124 actually, which is the level that we would expect it to be getting to after that if we have that price action happen. All right, over to the dollar index. So dollar index found support at the 50, which was not unexpected. Had a bit of a rise up to the 20 moving average, and now it's found itself all the way down again. It's trading in between the two ranges now pretty easily and consistently. So I would be probably expecting that we're going to be seeing this as our range for the day. We'll go to the euro and actually look at how we could trade the euro today before non-farm payroll is probably the easier trade, but we're probably going to see this trapped in this little zone a little bit, and I'm not really keen on either direction until it actually breaks one side. A daily close below here, we know we're long the euro. A daily close up here, we're short the euro. Really as simple as that. Okay, very, very simple. Let's go over to the euro. And again, you can see it's trapped between the two moving averages, the 20 and the 50. If you want to trade this on a scalping from a scalping perspective, these are your two zones. you go down to a 1 hour, and you've got your bottom zone and your upper zone, 107.80 and basically 106.80. I probably would raise that up just a little bit. These are the two zones that I would be working inside, especially today. Before we know non-farm payroll is generally a pretty slow day, especially during the Asian session until the numbers are released. So there's going to be no surprises to see that slow down. So just be very, very mindful of that. Okay, be careful that if it does get up here, be mindful that the 107.80 is a pretty strong area of resistance. And if we get a little bit of a downturn and we start to see a series of lower highs and lower lows on 15-minute chart, even if you like, then we know we've got very serious areas to aim for. A breakdown below here, we're aiming for the 106.80. I'll raise that up to 106.80. Okay, and a break up into the upper end, and we're going to 107.80. Just be careful that there's not a lot of pips there, right? So if you are scalping, just be mindful that there is only 20 or 30 pips. Make sure your stop loss warrants it. But if it does, there's nothing wrong with that. This is the range that we're operating in. Can't see it breaking these two boundaries before non-farm payrolls. Okay, so that's your scalping range for the day. All right, onto the S&P. And look, the S&P has a big rebound. Look, this is the double bottom we've been talking about for ages. Broke the neckline, has come back, retested the neckline from above, which is the perfect scenario that we want. That's what we call a conservative double bottom entry. Did exactly as we expected and wanted, which is great. And now it's already finding itself at the previous recent high. Look, there's no secret that we are at role reversal here as well. Yeah, this is support right through this area here. No question about that. 50 moving average is right in its face. So if it breaks past that 50 moving average and this role reversal zone, that is telling us something very, very serious about where this trend is going in the next few weeks. So realistically, it's done exactly what it needed to do. It's behaved itself perfectly from a standpoint of technical analysis. Double bottom, retest of the neckline, conservative entry. It's given us the three entries of the perfect double bottom. This one gave us the aggressive one, gave us the standard entry, and it also gave us a conservative entry. So it's been a really, really good trade over the last little bit. Again, non-farm payrolls, be very, very mindful. This is probably going to be very, very flat today. It's going to do hardly anything I would expect. It's going to hover in this range more than likely for the best part of the next 12 to 15 hours. And then when we get non-farm payroll results, anything can happen, as we all know, on a non-farm payroll day. So very difficult to trade, but next week we're going to know a lot about what's going on here. On Monday morning, if we open this up and we've got a daily close above the 50, so that's effectively over the 4,200, a daily close above 4,200, and we know we're looking for long opportunities everywhere, the minute, every single time we get a presentation of a smaller time frame pullback to a reasonable moving average, we will be looking at entering longs on those particular trades. And of course, a sell-off down and break of the neckline down on the other side is also telling us something that the sustained strength is not very sustained at all, and obviously we're going to start looking at weakening markets again and potentially pushing down to the double bottom. Not the ideal. I mean, in this scenario now, generally I'm looking for either side, but to me the long is a more opportune task really here. If we get a break above the 4,200, that makes our task a lot easier, because then we're really trading with the momentum of the swing, and we're trading with the momentum of what the US wants to do. So I would be very, very comfortable with that. Not as comfortable with the short, but in saying that, if we get a close below the 20 moving average and we get a close back down at around the 40.70 after non-farm payroll, and that's where we are on Monday, so be it. We start looking for the shorting opportunities back down to the double bottom. So that has been really good trading, and hopefully you've been able to get a good part of that. Okay, we've had a great week's trading. I think the moves have been really good. Our levels have held up. They've been gravitating to all the areas that we like it to do. So hopefully you've been able to get a good amount of pips this week. Have a great weekend, and I look forward to seeing you all next week.